Hey guys, Chad Shoop here, and welcome to my latest edition of Bank It or Tank It. I'm excited because today we're going to cover a stock that 3 people actually recommended. They wrote on YouTube, they sent me an emails, they wanted me to take a look at Shopify. So that's going to be the company that we're going to use today for our Bank It or Tank It analysis. And before we dive into the details on Shopify, I just want to let everyone know, if you're new to my series, Bank It or Tank It, that each week I break down one stock that you all recommend, and we run through the fundamentals, the sentiment, and the technicals to figure out if this is a company that we want to bank over the next 12 months, which means it's going higher, or tank because it's going lower. But with the crash that we've seen in the stock market, all of the stocks I'm going to be focusing on over the next few weeks are stocks that I would consider my Bank It stocks. So these are stocks that I like the companies, I like the fundamentals, I like the price charts, I like a lot of things about these stocks that I want to add them to my watch list. And with stocks on sale like they are today, after the more than 20% drop that we've seen in the broader indexes, it's a time to put these stocks on your radar to either start to scoop up some shares now and keep some cash in case we have more of a sell-off, that you can continue to buy more stocks along the way. So in this volatile market, these are stocks that you want to keep an eye on, that you want to start adding positions to. So today we're going to be breaking down Shopify, and just a big shout out to, I had 3 people write in about this company. We had Mike, we had Himeng, and Filippo write in telling me to take a look at Shopify and feature it for my Bank It or Tank It analysis. And I also wanted to let everyone know today that you can follow me on Twitter at ChadShoopGuru, and on there I posted a poll today for you all to go. I have stocks listed already that people have sent in comments on, but I also have another section that you can list your stock that you want me to take a look at there, and I'll be able to add it to my list if it's not already on there. But either way, go to my Twitter and follow me and take the poll to let me know what stock you want me to feature next week for our Bank It or Tank It analysis. And on Twitter, I'm also being very active as far as just explaining what's going on with the stock market, the dips, the big moves higher, the big moves lower, just everything that we're seeing. I'm on Twitter just commenting on that. So be sure to leave me a comment. You can use the hashtags Bank It or Tank It, and be sure to just mention me whenever you make a post, and I'll give you my 2 cents on either a stock or what's going on with the market. So just join me on Twitter at ChadShoopGuru, and I'll be happy to join in the conversation. Now, with Shopify today, this is a company that focuses on building brands online, building websites. It's an e-commerce platform. So I think that this is a great time to feature the stock because we have the coronavirus, which is basically shutting down all of the actual traffic that we would normally see out in the marketplace. People going to sporting events, people going to concerts, just traveling, doing tourism, going on cruises. All that is kind of going away over the next couple of weeks. So instead, people are going to have a lot of downtime. People are going to be on paid sick leave for longer than expected. Kids are at home, so you're going to have to stay home and take care of your kids. So a lot of people, while they're busy, but the brands that advertise on Shopify and the type of companies that are looking to build on that platform are really small to mid-cap companies. So these are mom and pop shops that are trying to start up. So now that they get some free time, I think that this is a company that's really not going to be impacted too much by the coronavirus. Now, don't get me wrong, everybody's impacted. That's why we've seen the sell-off. But this is a stock that has already sold off, so it gives us an opportunity today to take a look at the fundamentals, the sentiment, and see if this is a buying opportunity here after the decline for the stock, or if it's a stock that we want to avoid. So let's start by taking a look at the key stats for Shopify. Now, when we run through the key stats, we always have the total revenue and the net income. The total revenue is the blue bars on the chart, and the key for that is on the right-hand side, and the net income is the line graph on the chart, and the key for that is on the left-hand side, just so you can have a perspective of where things are. You can see net income has been negative up to 2019, and then in 2020 they expect to make the jump to being positive for their net income, which is profitability for the company, and then in 2021 and 2022 continue to see that improvement. So that's a nice turnaround. It's a big expectation for the company, a nice leap. But when you look at the revenues, which is what they're growing to help support that, revenues are on a very strong trajectory going higher, and you can see even 2019 it made a nice jump higher. Then they're expecting that to continue in 2020, 2021, and 2022 as just more and more brands are looking to take advantage of their platform. It's a very smooth and unique platform to help build e-commerce websites online. They're very similar to other websites like Wix, except they focus a lot on the shopping aspect, hence their name, Shopify, and that's helping them have an edge to be able to carve out this growth pattern for revenue and to continue to find new small and mid-cap businesses looking to take advantage of their platform and grow sales. Now let's jump over and take a look at the quick comps for Shopify. These are a few other online companies here. We have Wix, which is a key competitor, GoDaddy. These are all other website branding companies. And when we look at the market cap, we can see that Shopify has really carved out a huge market cap here, 45 billion compared to GoDaddy, which is under 10 billion, Wix just 5 billion. And these numbers are after the latest crash, so they've all had a bit of a haircut over the last couple of weeks. But we can see that Shopify is a pretty large cap stock. We have ServiceNow, Workday. They're the only two companies on this list that are the same size. But then when it comes to the short interest, we have the percent of shares outstanding. So it just kind of gives you an idea of how many people out of the shares that are outstanding, how many people are holding these shares to bet on the stock to go down. And it's not too high for Shopify, just 2.1%. You look at some of these smaller companies, it's 4.3%, more than twice the size for GoDaddy, 5.8% for Wix. So some of these other competitors are seeing a higher amount of short interest in those stocks. In fact, Shopify is the lowest on the list, so that's positive to see. It tells you that the investors are really buying into the stock. They really like what they're seeing, and there's not too many people yet that are betting on the stock to fall. Then we have the price to earnings ratio, and Shopify doesn't have one at the moment because, as we saw in the net income, they have negative earnings right now, so there's really no multiple that you can apply. But you can see these other stocks, because they're companies that tend to have small to no earnings growth, very little earnings to show because they're online. A lot of them are younger companies as well, so they haven't built up that profitability yet to really have these multiples. But you can see the ones that when they do have a little bit of earnings, they achieve these very high multiples. The average is 84.9, and that's really because of the growth that they're expecting to see in the coming weeks, that the earnings right now are just very minor to what they are expecting, and investors are willing to pay a premium for these stocks in return for the growth expectations. And then when we flip over and look at the total revenue growth, the 3-year compound average annual growth rate, and then the net income, I just have the net income and dividend there just to show you that these are not large cap stocks. Again, the net income, it's not there over the last 3 years. Paycom's the only one with a growth rate for net income. None of them have a dividend yield, so none of them are trying to pay out dividends. They're all just focused on growth. And you can see on the revenue side, that's where all the growth is showing up. Shopify has tremendous revenue growth, 59.4% on average every year over the last 3 years. So that's an enormous growth rate for revenues. Twilio is the only one that kept pace with that. The average for its competitors, just 29%. So it's actually doubled the average for these key competitors in the industry. So it's really growing at a high pace. And we saw that when we looked at the key stats chart in revenue, that Shopify was really growing its revenue at a rapid pace, and that's showing up here. And I also like to take a look at what the investment community is rating the stock. And right now, according to Capital IQ, and they have 30 analysts that are covering the stock, it's rated as an outperform at 2.39. So 1's a buy, 5's a sell. So it's just barely into the outperform category at 2.39. But it tells us that investors are still bullish on the stock. They've maintained their bullishness throughout the volatility that we've seen. So our last thing that we're going to look at is the price chart. So here's our price chart with everything we're looking at for Shopify. And I have all my key trends that I want us to take a look at pulled up. So as always, let's start with the 200-day moving average. So it's in yellow here along the bottom of the chart. And one of the key reasons I always have the 200-day moving average is as a sentiment indicator. We use this to figure out how the market's feeling about the stock. If the stock is above the 200-day moving average and the 200-day moving average is rising higher, which it is at the moment, barely, but the stock's also holding above the 200-day moving average. So that's a bullish sentiment indicator at the moment. Once the stock falls and closes below that, then it's a mixed signal until the average starts to slope downward. Then it's a bearish sentiment indicator. But for today, for Shopify, we can also see that this 200-day moving average, just a simple moving average, has acted as support. We saw it back here during 2019. And then with the current crash that we've seen in stocks, this is about a 40% drop from the high to the low for Shopify, but it's also catching support at its 200-day moving average. And I just drew this trend line in, and in case this is a bottom, it gives us an idea of something to look for to try to build an uptrend in the stock, but it's assuming that the recent lows end up holding for the stock. Then this is my other green support area, which now would likely act as a little bit of a resistance. We'll see how it does this week, but I'm just basically taking the previous high that we saw in 2019 and extending it across because that's a pretty key level. We broke out to new highs. It was a bullish thing to see, but then as soon as you come back below that, it's a significant pullback. And I mean, it took a 40% drop to make it happen. So it is something to keep an eye on, because you could see here before the breakout had a little bit of a resistance at that level, and then here it wanted to hold kind of around this area. It wasn't touching the line, but you can see we had a low here after one of the sell-offs just above the line, and then it held for about 3 days just above this key area. So I think that is going to be a significant level to look at over this week and next week, just to see if we can break above it and then hold above that. And then I have the red resistance lines. I have 2 downward sloping ones that I want to talk about. So I just wanted to show you that their trends really do matter. You can see that the stock was stuck in a downtrend here in the second half of 2019, and then it broke out of that and started to create a new uptrend and had a really nice move higher. We could draw support lines through this all the way too, showing you that when it broke this support line that would be under this uptrend, it broke it right here in late February with the first pullback that we saw in stocks, and then that signaled that shares were heading much lower, and that's exactly what we saw. So I'm drawing a new red resistance line here across the top, because this is going to be the key level to break out of that to see any sort of upward momentum in the stock. So if you're looking to add to shares, if you want to buy on a dip, that's great. We're definitely at a dip right now. But if you're waiting for confirmation of an uptrend starting to form, then you want to wait for this red resistance line to break, and then you can jump in. So it really depends on your strategy. If you're buying a dip, if you're taking that approach, you always want to ease into the position so you don't buy your full position here, because you just never know when the bottom of the dip is. For example, if we break below the 200-day moving average, it'll likely be a short-lived dip below the 200-day moving average, but then we'll see the bounce back, but more than likely we'll be in a downtrend for the stock for at least a couple of months if we break below this 200-day moving average. So that's something that we're going to keep an eye on, because the S&P 500 did break below its 200-day moving average, and now it's trying to rally back up. But that is going to be a key level to watch going forward, and just the fact that it broke that, if we don't get a quick total rebound out of this pullback that we're in, then it could keep us in a bit of a downtrend for the broader stock market. So it's something I'm keeping an eye on. And in a moment in this video, I wanted to talk about my favorite way to trade that, which is selling put options. And it's just a great strategy to implement during volatile markets. But more on that after I give you my analysis for Shopify. But more on that in just a moment. I had one last red resistance line I just wanted to point out. And this is just before the gap higher back in early February. And then it broke down back below that pretty strongly. So I think going forward, this will be a key level to watch for the uptrend, that we want to get back above that. That could act as resistance and keep shares from rallying, because as an investor, when you want to buy a stock, you want it to be making higher highs and higher lows. So as long as we get a bottom above this previous low point, then we're still in a bullish formation for the stock. And when we zoom out, you can see that it's really been on a tear. This stock is making a nice run higher over the last couple of years. And as we saw in 2019, just because we get these sharp pullbacks in the stock doesn't mean this uptrend is over. Instead, it continued to excel and make a major rally over the last 6 months before the recent crash or correction, whatever we're calling it. And now we just want to see it start to climb back up and break above some of these key levels to signify that an uptrend is in place. Now that we've looked at the chart, we looked at the fundamentals and the sentiment, we can run through my checklist to figure out how I feel about Shopify, even though you should already know from the fact that I'm only going over Bankit stocks. But I just wanted to recap how the fundamentals look, the key stats. We looked at the net income. It was negative at the moment, but we liked the nice rebound that you were seeing. And I really wouldn't buy into that too much if the revenue was flat, but we saw a nice trajectory in its revenue. So I'm buying into the fact that they may be able to turn it into a profit over the next year or two. So I'm bullish on the fundamental side. That gets a check mark. The sentiment, the stock's holding above its 200-day moving average. It's rated as a buy. So as long as those two things hold, it's going to get a check mark for sentiment, but that can flip pretty quick. If the stock goes below its 200-day moving average, it's going to get an X for sentiment. So that's something to keep an eye on. And then on its price chart, on the technical analysis, looking at all of those key trends, it's basically the same thing as the sentiment. It held above its 200-day moving average. So that was bullish, and that makes me want to give it a check mark today. But that's a very close key level to keep an eye on. If it breaks below that, then it's going to get an X, because I think it'll be stuck in a bit of a downtrend over the next couple of months. So Shopify ultimately ended up on my Bankit list today. Now, normally we would jump right into the price targets for Shopify, but with the major correction that we've seen in the stock market, we're not going to do that today. Instead, I want to focus on a different strategy that you can use to implement in the stock market, and there's going to be a little pop-up right up here in the corner of the screen that you can click on. That's going to tell you all about it. It's my favorite strategy, and my colleague Matt Battiali hopped on the camera to film everything about what he calls 1 minute windfalls, because that's all it takes. 1 minute, and if you're selling put options, you can enter the trade in just 1 minute to collect income and possibly own shares of a great company at these tremendous prices that we're seeing in the stock market today. After 40% pullbacks, you can agree to buy the stock at an even lower price. You won't buy it unless it falls below that and you end up paying the price that you picked for the option. But either way, no matter what happens, you got paid the premium of the option, because in this volatile market, with what we're seeing right now, the big whipsaws, everything that's going on with the crash that's happened in the stock market, people are panicking. And what that does to the options market is it makes the premiums for what you're paying for the options go through the roof. It's really hard to buy options right now. You have to be really picky, and I've been able to do it with some success, but it takes a lot of research. On the flip side, now's a great time to be selling options. You're selling the put options for a premium, so you're capitalizing on the surge in the price for these options, because the reason they're so high is because volatility is high, the expected move for these stocks. Whereas we used to only see the Dow move 100 points in a day, and that was a big move. Now it's moving 1,000 points nearly every day, and we're just starting to get used to it. But in the options market, the way it factors in that volatility is with higher premiums. So instead of fighting the tape and trying to find these few options that are actually going to reward you for buying them, instead you can turn around and sell options to generate income in your portfolio. So go right here, click on this link, and also I'll have a link below the video that takes you back to my article that I wrote. So if you missed it, in my article I actually have an example on Shopify about how you can use selling put options to add exposure to the company, to generate some income, and just the fundamental aspects of selling put options. So be sure to check those links out and let me know what you think. Go to Twitter at ChatShootGuru. You can mention the bank it or tank it hashtags, and be sure to just mention me and let me know what you think about the strategy, selling put options in this market. And don't forget about my poll on Twitter. Go there, vote. Let me know what stock you want me to use in my upcoming bank it or tank it video. So that's all for today. And if you haven't yet, scroll right below this video, click subscribe so that way you don't miss out on any of my weekly updates. And until next time, I'm Chad Shoot.